Hello everyone, my name is Gregor Horat and welcome to a new free video where I want to give you a new technical update for euro dollar and pound yen. I posted a video on these two 10 days back or so, so it's good timing for a new update because the market moved very nicely recently. Before we go to euro dollar and pound yen free analysis, if you are a member, please check a new uploaded video. It's a 34 minutes long. So I went through a lot of major markets. I also touched metals, crude oil, also looked a closer look at the S&P 500 and DAX. So if you are a member, please check it out. If you are not, you can see these videos for actually, you can get it with an exclusive offer for the first 2 months. Actually, you can get our prices for only 1 month. Okay, so it's actually 50% discount, okay, for the first 2 months. What we have been looking at the euro dollar. Well, as you know, I think I also made a video update, and not video update, but analysis. Let me just check. Yes, here it is from July 20th. If you recall, I made a video analysis also here about the potential head and shoulders pattern, and also talked about this triangle consolidation in wave 4. Okay, so what I have been looking at back then is that actually it was the start of the summer, so markets slowed down a little bit, which is normal, but it was very interesting to see markets slowing down at very important potential head and shoulders neckline. Okay, so I knew that consolidations take time to unfold, so it was actually perfect timing before we may see a new break to the downside. So if you are familiar with the Elliott wave techniques, these patterns and subwaves could really give you an idea when the breakout may occur. Okay, so back then I have been tracking ABCDE pattern. I knew that market, if I'm on the right track, of course, market should starting to show us evidences of a bearish breakout after wave E. Okay, so as you know, I've been looking for this triangle here, and also highlighted when the breakout was confirmed in our past video. I said that we have seen a nice move to the downside, and actually I highlighted a very important pullback back towards this trend line, because if this is a bearish triangle completed, what you would want to see is a continuation lower while we are below that trend line. So of course there are always different interpretations. There were some chances that we are still in some larger, more complex corrective wave 4, which means we could after all see higher prices. But because of German Bund, so if you review that video, because of German Bund, which already showed signs of a strength, I thought that euro dollar after all is really forming an important breakout. So what we are looking at now, well, I'm tracking prices in a fifth wave here. Okay, so it's very important to understand that fifth wave is a final leg within a larger structure. So now when a lot of traders are actually seeing this breakout happening now, well, maybe they are too late. Okay, because after all, we have seen some nice extended leg to the downside. There's still room for another push lower into a fifth wave, but looking for potential short opportunities here, it's a little bit more dangerous than at higher, better prices. So for me, we have been short from around 1.16 level, but I think that looking for a new trade here, it still could work out. Okay, while we are trading below this invalidation level, because wave 4 must not trade into territory of wave 1. This still can be maybe a new chance for shorts, but if you are going for it, please do it with maybe with a lower position size, because sooner or later this market will bottom. In fact, I am already seeing some signs of potential reversal, which may take us higher. Okay, so what I'm looking at is actually on a bigger structure, bigger cycles here. What I'm looking at is a waves 1, 2, an extended wave 3, wave 4, and wave 5. So what I'm looking at is wave 4 bounce that may occur very soon. And when this shows up, you will see prices retracing back to the area of a former wave 4, and this is here. Okay, also there's a chance that wave 1 was completed. Okay, the whole cycle for wave 1. In such case, you would see wave 2 pull back even higher. So in either case, move out of a triangle is final part of this bigger 5-wave cycle. So I'm expecting a bounce very soon. That's why I'm saying that you should be very careful if you are planning maybe to look for new shorts here. In fact, metals made a quite nice bounce at the end of last week on Friday. Also silver, as I will show you, also silver actually made a failure break to the downside below this triangle trend line that I will show you on a weekly chart, but then we closed a little bit higher. So it looks like that dollar is not strong at the moment and that we could see a pullback. So if metals will see higher prices, I think that this will also impact the euro dollar. So watch out for this, maybe this invalidation level at 1.520. It's a very important level. If we break above this, then I'm sure that we will see much higher prices for a corrective recovery. Okay, on a weekly chart, well, nothing has changed. I still think that this could be a completed flat correction, but as I said, more downside is expected to occur after a pullback. There are also, again, different interpretations. Okay, this is very important when I analyze the charts. I'm just don't be stubborn and looking for just one particular explanation. You have to be open-minded, okay, especially when it comes to trading. I have no issues to turn from bearish to bullish count or vice versa. So what I'm trying to say here is that there's also actually an idea that maybe this was already low in place for euro dollar, okay, and that this is a start of a new bullish cycle. But still, this was an impulsive decline, and this is key for the next 6 months, okay? Because even if this trend has really turned back to aggressive bullish mode, you need to see a 3-wave retracement before this pullback from 2018 highs can be completed. So for now, this is only one leg to the downside. You need wave B, you need wave C. Okay, so in both cases, and then move higher will continue. So in both cases, no matter how you look at this price chart for the long-term perspective, I think that there is more weakness ahead on euro dollar, and as I said, after a pullback, after wave B, maybe after wave 2. Okay, so be aware of a bounce and then a reversal lower. And why you should be also very careful here, because on a weekly candlestick formation or technical chart here, what I see is that actually price is sitting or reversing from this 200 period moving average. After all, we have been retesting this old trend line, and also this is 100 period moving average in blue. So clearly this is a very important level which could produce some recovery here. So generally speaking, euro dollar is an important base. As I said, we may see another final leg down for a 5th wave to make 5 clear subways within a 5th wave, but sooner or later bigger corrective recovery will occur, which means be careful and watch out also at metals, which I will show you now. So as I said, silver, here it is. Look at this weekly chart, okay? We have seen a nice push to the downside, but clearly market did not make a decisive break. What is a decisive breakout? When I identify potential support, I want to see aggressive drop through this support and a daily or even better weekly close well below that support. This is a decisive breakout. If you see prices moving lower and then reversing higher, and on Friday you see a close around this trend line, well, then this is not a decisive breakdown. It's actually a failure breakout, which may keep these prices trapped in this contracting range. So actually this wave pullback, when this will occur, I think maybe we are already stepping into it now. That's when I may also see more upside on euro dollar or pullback lower on dollar index if you want. So watch out for these metals, because I think they may play a very important role for dollar in general. But longer term speaking, I see silver same as euro in a downtrend, but nothing moves in straight lines. Corrections will occur. Okay, now let's take a look also on pound yen. So on pound yen, what we have been discussing here 2-3 weeks back, I have been looking and identified a completed corrective recovery, and the reason why I put this chart and made a free analysis. Actually, I made this from vacation because it's very clear wave count. 3 waves rally, more importantly, reversal to the downside. So this reversal lower, okay, this drop was confirmation for me that market after all completed an ABC rally. So market told me that after all this was a corrective recovery. I haven't rushing with any shorts here, because when prices is at the top of this channel for at potential wave C resistance levels, you don't know if actually this is wave C. You want to see market to responding from these levels. So what we have seen is a nice reversal to the downside. So this was a key, and after I saw this when I was on vacation, I immediately sent this chart out and said that this will likely cause more damage for pound ahead. And clearly, as you know, we have seen a very nice drop. So here's an update on pound yen. We have seen a nice drop so far. This was actually, after all, a flat correction for a wave 2. I actually played on the short side with members here and cut almost 500 pips or so. And now it looks like that we can be slowly coming to an end of this 5-wave cycle. But what I don't like is this only temporary spike to a new low. Normally this occurs in a flat corrections or running triangles, where you see a very quick drop to a new extreme and then market turns back into the range. Okay, normally this is not something what you want to see, an impulsive reaction, an impulsive 5th wave, because they still need there are still strong waves and will show you some clear strong directional movement. But this was only temporary drop, and also it was made only by 3 subwaves. So clearly this, I think it's not a completed wave 5, okay, but probably it's part of a wave 4, which can be flat correction or maybe even a running triangle, as I said. But technically speaking, I think that this trend is still bearish, and ideally we will see a major recovery after we see another drop here from this wave 4. Now, wave 4 in ideal scenarios for potential new shorts, because I'm tracking this one after all, would be a rally back towards this 38.2%. So this is, as you know, ideal resistance when you're tracking wave 4 corrective recovery compared to wave 3. And also in such case, you should keep an eye on this former swing low, okay, because if the important support is taken out, then normally this important support on a pullback will be retested and again will turn into important resistance. Okay, so I'm watching these levels very closely. I will see what happens up there, and then maybe even try to again to play on the short side. So pound yen is also interesting, or Japanese yen in general, because I see cable in bearish mode. I see more weakness ahead there, and also what I see is that stocks are keep pushing higher, US stock market. Okay, but if sooner or later maybe stocks will find resistance and drop from there, I think that this can cause even more damage to pound yen, or I should say even more will make in risk-off environment Japanese yen even stronger, which is strong already now when stocks are up. So if stocks turn down, well, I think that this would cause more upside for Japanese yen. So that's why I like this one, and will clearly keep a very close eye on it. Okay, so traders, I hope you enjoyed this video. If you have any questions, please contact me on Twitter. If you're our members, contact me in Slack or send me an email. So that's it. Have a good day. Bye.